Okay, let me start the presentations with the climate change impact to Thailand. Thailand is among the most vulnerable countries to the adverse impact of climate change, and it has constantly faced with the extreme weather such as flood and drought, causing severe impacts to the economy and ecosystems. As a signatory to the Paris Agreement, Thailand has made significant efforts to mitigate the country's greenhouse gas emissions with available resources and capabilities. So climate change is currently addressed at the highest policy level. And according to the climate change master plan of the countries, it covers the strategy to mitigate the impact of climate change, adaptation, and capacity building. According to the country's nationally determined contributions roadmap on mitigations, Thailand's targets to achieve greenhouse gas reductions by 20% from the business as usual level by 2030 compared to the 2005 baseline. So before we start looking into how the public and private sectors in Thailand work together in tackling the problems of greenhouse gas emissions, let's look at some of the key numbers on sources of carbon emissions in Thailand. So in this graph, you can see that the main emissions actually coming from the transportation of the energy sectors, which cover transportation and also industrial sectors. This graph shows that the energy emissions actually comes mostly from the industrial sectors and transportation sectors. So for the industrial sector, the emission is, both directly come directly from the factory sites and indirectly generated from the grid electricity. So to address the climate emergency, Thailand's efforts to reduce carbon emissions actually have been focused mainly on the emission reductions in the energy and transportation sector. At the centers of the government strategies is to reduce the carbon emissions in the energy sector, which is reflected in the country's power development plan. According to the latest power development plans, the strategy is to increase renewable energy to about 27% of total energy consumptions by 2037. And the expansion of renewable energy in Thailand actually has progressed very well over the last 10 years. And the key reason behind the successful development of renewable energy in Thailand is the commercial incentives provided by the government to private sectors, the private power developers during the early phase of the development. And in fact, the expansion of the renewable energy generation has been so successful that the government has to cut back some of the commercial incentives. In terms of installed capacity, as you can see in the chart, the plan is to have installed capacity of renewable energy, inclusive of hydropower, to about 46% of total installed capacity by 2037. Okay. The other key focus for the government to reduce carbon emission is in the transportation sectors. In 2018, the transport sector accounted for more than 1/3 of the country's final energy consumptions and 26% of total carbon emissions. In particular, the use of passenger transport relies heavily on personal vehicles. So it shows the importance of facilitating mass passenger transportation system in the country. Bangkok metropolitan area is the country's urban hub, accounting for 80% of the country's total urban space and 23% of the Thai populations. So to address the transportation challenges resulting from this rapid urbanization in Thailand, the government aims to facilitate the shift from road to rail passenger transport, particularly through extensions of mass rapid transit lines and construction of double-deck railways in Bangkok. In this slide, you can see, the extensions of the mass rapid transit lines in Bangkok, which have planned until 2024. This is what the network of mass rapid transit line in Bangkok in the next 5 years after all this, the completion of all these extension projects. So we have talked about the strategy to reduce carbon emissions in Thailand. The transitions to a more resilient and sustainable economy will require significant investments from the government. But the government itself does not have the capacity to fund all these planned investments. Therefore, the involvement of the private sector is very important to move forward with the investment plan. Public-private partnership investment schemes are a very typical funding structure for large infrastructure projects in Thailand. The government and financial regulators also recognize the important role of the financial sector in driving the country's sustainable development. Particularly, all these investments will require support in the financial sector to fund all these investment projects. So there have been a lot of efforts from the government and regulators to encourage participations by the private sectors in terms of undertaking the projects, also be helping funding some of the projects. So when we talk about sustainable finance, it means fundraising basically to fund all these sustainability projects. And actually, as a matter of fact, there have been already a lot of sustainable finance happening in Thailand, and to fund all these infrastructure projects. And for the Thai financial market, it is very interesting to note that most of the infrastructure projects in Thailand are funded by domestic financial markets, whether they are government-sponsored projects or public-private partnership projects, or projects that are undertaken solely by the private sectors. That's the reason why you do not see a lot of debt issues coming from Thailand in the international markets, because there is basically sufficient domestic liquidity to fund the investment projects. For most of the greenfield projects, whether it is the mass transit projects or power plants, renewables, energy plants, the greenfield projects are mostly funded by project loans from commercial banks. And once these projects are up and run and have a steady cash flow, usually the companies that own these assets will come to the market, to the bond market for refinancing, both for their equity portions in the project and also for the refinancing the project loans themselves. Same as the electric train projects. When we talk about the public-private partnership schemes, the government themselves also need to have funding to fund the government's equity portions in the projects. So the financial markets functioning in supporting the funding of the projects are very important. When we talk about such as sustainable finance. In fact, there have been a lot of a substantial amounts of sustainable finance in Thailand already. It's just a matter of labeling these sustainable finance transactions as green bonds. You know, when we talk of green bonds, green loans, or sustainability bonds or loans, they are all related to the green projects that will help reduce the carbon emissions, and some of the fundraising are also related to the social programs. And the role of the regulator is to make sure that the market is, you know, fully aware of this sustainable finance, and also encourage the issuance of sustainable finance and the functioning of the green bonds ecosystems, which include the issuers, the underwriters, the external reviewers, and investors. And particularly, you know, the local external reviewers in the case of Thailand is also very important to promote the issuance of green bonds. This slide shows the number of green bonds issuance in Thailand over the last 3 years. As you can see that the number of issues keep growing from 2008 to 2020. And the size of this transaction also, you know, has been, you know, increasing. There's one transaction that I would like to mention about was the sustainable bonds issued by the Ministry of Finance last year, which is sustainable bonds. The bonds comprise two portions. The first tranche is to fund the Orange Line mass transit project in Bangkok, and the second tranche of 20 billion baht is to use for the economic relief program due to the hardship caused by COVID-19. So it was a very successful transactions, hugely oversubscribed, with a coupon rate, very low coupon rate at 1.585%. And then transaction was basically subscribed by local investors, and the external reviewer is the Sustainalytics. So this is another example of the government's involvement in promoting sustainable finance in the countries by doing, you know, the bond issue by themselves for a project that helps on carbon reduction, also on the social purposes. I would like to also mention the involvement in the banking sectors. The Bankers Association of Thailand launched the guideline for responsible lending or sustainable banking guidelines as a guideline to be used by members of the associations. And basically, the guidelines cover, you know, some of the principles, including adopting sustainability as an integral part of the bank's business strategy, and the top management's commitment to responsible lending, and also, you know, a policy to engage with clients who are involved in projects that help reduce negative impact on the environment, and also, you know, improving the sustainability performance. And also the banks will have to establish internal policy and process to address the key ESG risk, and to communicate to the public about their policy on these matters. So this is my last presentation slides on sustainable finance in Thailand. Next, it will be presentation by Stella Chang, head of international business of Golden Credit Rating from China. She will talk about sustainable finance in China. Thank you.
Hi, thanks, Naka. Thanks for your introduction. Now I'm trying to share my screen. Hi, Mr. Santi. I see you online now.
Yes.
Would you like to add some words?
Yeah, thank you. Go ahead, please.
Okay. So I have to restart. There are some technical issues for this.
Go ahead, Stella.
Can you see my screen now?
Yes, we can see your screen.
Great. Good afternoon, everyone. Thanks for having me here. Today, I would like to talk about China's roadmap to a carbon neutrality plan, the structure of green bond market, as well as the element to support a sustainable future. So, as the President Xi Jinping announced in September of 2020, China aims to achieve peak emission before 2030 and carbon neutrality by 2060. This shows that China has linked the carbon development with the country's growing strategy. According to the 14th five-year plan, China will further transform its energy consumption structure by wider use of clean and renewable energy. The carbon dioxide emission and energy consumption per unit of GDP will be reduced by 18% and 13.5% respectively. The plan also aims to expand the forest carriage to 24% and increase the share of non-fossil energy in total energy consumption to around 20% by 2025. The pathway to achieve this target will focus on 5 key sectors: electricity, industrial, building, transportation, as well as agriculture, forest, and other land use. For electricity, requires to phase out of conventional coal-fired power plants, adapt renewable power, build smart grid and storage technologies. For industry sector, to optimize the industrial process, utilize the energy efficiency, and switch from fossil fuel to electricity. To build up green buildings using environmental friendly materials and energy saving design. For transportation sector, to use a low carbon energy and improve efficiency with innovative technologies. Last but not the least, to improve the environmental quality. So to achieve this target requires an annual investment of at least 320 billion US dollars to 640 billion US dollars. And around 80 to 85% investment will be contributed by our private sector. So after the COVID-19, the market players tend to more resilient economic system and seek for more stable and long-term returns. Thus, the post-pandemic recovery are focused on 4 elements. From the consumer side, the plan is to encourage green consumption, such as promoting electric vehicle. From the supply side, to guide investment in traditional infrastructure to support green urbanization, to construct of public health systems, pandemic prevention, and treatment system. After the outbreak, over 67 billion US dollars of COVID-related bonds have been issued to support the public health system across the country. So sectors that enhance response to crisis and risks are expected to attract more resource and investment. So the most important pillar is to strengthen investment in new infrastructure, which is based on the information and communication technology, such as 5G, AI, high-tech manufacturing, and so on. So the total estimated direct investment in new infrastructure will be 1.5 trillion US dollars from 2020 to 2025, which translates average of 254 billion US dollars per year. In order to facilitate a green recovery and achieve carbon neutrality goal, China has rapidly evolved the green financing system over years, which was underpinned by macroeconomic policy, regulatory, and technology. The green bond market plays a significant role in green development roadmap. So this is the structure of China green bond market. The green financial system was initiated by the State Council and the Central Committee 6 years ago. A wide range of supporting policies, pilot programs, and mechanisms have been launched afterwards. Those efforts have led to a rapid growth in China's green bond market. From the issuer's aspect, financial institutions include policy and commercial banks normally dominate the market. As green pioneers, the financial institutions raise capital then lend to green projects to lead and cultivate the green bond market. State-owned enterprises also a major player in green market due to a raising green awareness and policy stimulation, which followed by the local government financing vehicle. It is quite easy to tap in China market. And the private non-financial issuers have a relatively small share. The majority of investment come from domestic market, and the banks are the dominant investors, followed by mutual funds and insurance companies. Although foreign investor remains small share, but the participation will increase with continually open China bond market. Last but not least, independent green verifier, guarantee agency, and investment banking also play important roles to promote the green bond markets. So China's regulators have been strongly supporting the green bond market through numbers of policies and physical and financial measures. There are multiple authorities overseeing and providing its own guidelines to different types of bonds, and all of them are accountable to China State Council. The green financial bond is regulated by the People's Bank of China. Green corporate bond is regulated by the China Security Regulatory Commission, which also oversees the Shanghai and Shenzhen Stock Exchange. Green enterprises bond is supervised by the National Development and Reform Commission, and the municipal bond is regulated by the Ministry of Finance. So by the end of 2020, China has issued over 700 green bonds, totaling 180 billion US dollars, or around 20% of the global green bonds in 5 years. The top 3 inflows from the proceeds are clean transportation, clean energy, and pollution prevention and control. 2020 issuing value was slightly decreased due to amount of specific bond issued to support the pandemic control and economic recovery. So the booming of green bond is not only just from the primary end. The secondary market trading activities also have achieved a significant increase after 2017, along with the developing market. So the down left figure shows the green bond ratings distribution. AA corporate rating took the biggest share in 2020 as the quite number of SME issuers increased with the incentive policy and gradually penetrated sustainable concept. From the bond rating side, the AAA rating still have over 40% of the market share, as some de-risk tools are deployed to secure the green bond market. There are also pricing incentives for green issuers. The down right chart shows that the green bond normally have a lower average coupon rate than a regular offering. So comparing with the large side of green bond issuing, the investment is still under the developing stage. China regulators are making efforts to attract more domestic and global investors. For instance, the transparency plays an important role for investors to make decisions. They want to understand how the proceeds are allocated and want to monitor the green effectiveness of the projects. China regulators have pushed issuers to make sufficient, comparable, and complete information disclosure. And the mandatory disclosure with standard requirement is expected to launch before 2022. So as the issuers have been extended from large entities to SME, de-risking tools like credit enhancement and guarantees are deployed to secure a high quality market. For the domestic investors, they are incented by the concrete green policies. For instance, some provinces provide a special fund to compensate the possible loss from the green investment. And banks are rewarded with a higher score in macro potential assessment by the central bank for their performance on the green credit, which can lead to a monetary benefit, such as more flexible capital adequacy requirements. Banks also benefit from increased access to medium-term lending facility that green loans and bonds are accepted as a collateral in liquidity operations. And the tax examination for green bond investment is also under discussion. So China is open up interbank market and remove quotas limitation to attract foreign investors. And a major step is to exclude controversial co-investment from green bond funding, such as a clean coal use and clean firepower, to align with global standards. The next step will be tackling the use of proceeds and raise the bar on usage in general working capital. So, okay. So with climate actions are now more important than ever, we think below 4 elements will significantly support a sustainable future. First is the regulatory incentives. Just a month after the carbon neutrality pledge, the guiding opinions on promoting climate changing financing was jointly published by China's top environmental, economic, and financial authorities. Under the opinions, financial institutions will be incented to develop climate-friendly and green financing products. A market-based mechanism will also be set up to encourage participation of SME and the public. The authority also commits to formulate mandatory requirements for climate and ESG disclosure, and to create a centrally managed monitoring, reporting, and verification system of climate investment and finance is also under the discussion. Furthermore, China will deepen the global cooperation to gradually integrate with the global market in taxonomy, financial and regulatory incentives, and green product specifications. Domestic financial institutions and enterprises are able to engage in climate financing business overseas, and the foreign institutions are encouraged to issue and invest the green bond in China. As the Build and Road initiative is calling for green and low carbon too, lenders, investors, and corporates will gradually align the project with the Paris Agreement. In addition, the green innovation can lead to new ideas and business models. China has set up pilot zone for innovation. The key tasks are including designing local policies, setting up finance units, innovating products and services, as well as establishing market mechanism and infrastructure. These testified innovations are expected to apply nationally to unify green financing standards. So China is working on fintech-driven green finance now, which could provide an infrastructure to increase efficiency, transparency, and security for climate finance. Using digital technologies such as big data, AI, blockchain, and the Internet of Things can encourage greater financial innovation, expanding financial access to citizens and SME, as well as cultivating new business model. Now, currently, diversified green products and market system have been launched. For instance, after years of trials, carbon emission trading system officially launched this year, covering over 2,000 coal and gas power plants and other facilities across the country. This is a major institutional innovation to control and reduce greenhouse gas emission. In addition, China has issued the first bunch of a carbon neutrality bond, which raised about $1 billion in total, and the proceeds will be used to finance carbon reduction projects, mainly in clean energy, clean transportation, and green building areas. So carbon neutrality bond need to be verified and measured with environmental effectiveness, also applied to a mandatory disclosure requirement. So last but not the least, a third-party verification system will be utilized to make sure the products and services are aligned with green guidelines. Credit rating agencies also encouraged to integrate the ESG factors in their rating methodology in order to guide the capital flow towards green and sustainable areas. So this concludes my presentation today. Thanks for listening.
Thank you, Stella. Can we now call on Madam Atsuko for her presentation?
Right. Hello, everyone. I'm going to change the, okay. Right. So, well, can you hear me?
Yes, we can hear you.
Hi. Thank you very much. Hello, everyone. My name is Atsuko Kajiwara. I'm from Japan Credit Rating Agency. It's my great pleasure to have a presentation for today at this webinar. So, today, I'd like to introduce a new type of sustainable finance called the climate transition finance, which promote the innovation and transition to the carbon neutral world. Well, I show the road to net zero carbon by 2050, which means in October 2020, Japanese Prime Minister Mr. Suga declared to realize net zero carbon society by 2050. As you may know, this is not only the case in Japan, but those who attend this meeting today find that your country set a long-term decarbonization goals. In order to achieve this goal, it is necessary to support the company's efforts on reducing its GHG emission. The world noticed that green finance for clean technology is not enough to achieve carbon neutral. Our long-term journey needs to support companies' transition strategy and innovation for greener technologies. In Japan, the government announced to accelerate green finance, climate transition finance, and innovation finance for realizing lower carbon society. The government also created 200 million USD equivalent fund for supporting companies which try ambitious innovation for zero carbon technology. Then we would like to see how much we should reduce CO2 emission. This chart in left-hand side is CO2 emission by industry in Japan in 2018. Japan emitted 1.1 billion tons CO2 in total. Looking at Asia as a whole, investment needs for decarbonization rose more than 1,300 trillion Japanese yen, which is equivalent to 12 trillion US dollars by 2030, according to Japanese intelligence. Comparing to such large necessity to reduce CO2 emission, green bond could do very low limited loss. In Japan, CO2 emissions from factory is the highest. As you may know, this is impossible to decarbonize 100% with only the way to introduce renewable electricity or efforts to use energy efficiency. but we need ambitious and drastic innovation for the future, as our government promotes. So considering these situations in mind, our roadmap for 2050 with sustainable finance is like this graph. In order to reach to zero carbon, the road is not always linear, but it goes ahead with discontinuous drastic innovation realized time to time. With such innovative technology is spreading to the market, then our less carbon society moves forward to the final goal of zero carbon. On December 2020, International Capital Market Association published Climate Transition Finance Handbook. This handbook explains the importance of supporting companies' transition pathway as climate transition finance. Asia's industrial structure is different from EU. We have many manufacturing industries, while EU imports products without any CO2 emission. And manufacturing industry's roadmap for carbon neutral will be a very tough, tremendous investment for innovating or transforming to cleaner energy. Therefore, we need transition phase to smoothly move forward to less carbon world with the support from financial institutions. Next, I'd like to explain what climate transition finance is. As written in this slide, climate transition finance is a framework for supporting companies which has to emit large volume of CO2 and has been difficult to get finance from sustainable finance market at this moment. But if they set a mid and long-term CO2 emission reduction target to reach carbon neutral with a level investment plan, then we should finance the such transition strategy. This is the main factor of the climate transition finance. And when you implement the climate transition finance, there are two types of transition finances. One is so-called limited user proceeds type of finance. This includes green bond, social bond, and sustainability bond. Handbook follows the green bond principle and limit the user proceeds not only to green eligible, but also to transitionally green eligible assets. These these finance should be followed the following 4 factors which are written in the green bonds. One is user proceeds, 2, selection criteria and process, 3, management of proceeds and reporting finally. Second, the finance does not have to limit eligible assets, but link to long-term decarbonization strategy. This is called sustainability-linked bond or sustainability-linked loan type. In this case, determine KPI relevant for the climate transition, set ambitious and meaningful SPT, which is a sustainability performance target, and then link the sustainability performance of the company to the financial conditions of the bonds. This is a sustainability linked to loans or bonds type. In order to declare climate transition finance, it is necessary to add 4 more factors, which was stipulated in ICMA's handbook. First, the company's long-term strategy. They have to have long-term transition strategy and governance for realizing this strategy. The purpose of the investment should contribute to the issuer's climate transition strategy, and the transition lobbying should contribute to achieve its transition to change to the business model, which can contribute to achieve Paris Agreement goals. Second, the transition efforts should relate to company's core business model. It should also in line with future temperature changing scenario. Since climate transition finance mainly aims to support large CO2 emission industries' decarbonization projects, It is necessary to connect the climate transition strategy strongly to correlate to the company's business model. For the third factor, the transition strategy should be based on science. It is preferable that the strategy is quantitatively measurable. It is easier to get science-based target certification. However, this is not compulsory. If the company does not get a certification for its strategy, but they aligns with international or national goals, which are considered to be globally recognized, then it could be okay for this case. The last factor is to ensure the transparency. Green bond or sustainability-linked bonds require the company to ensure the transparency as much as possible. This is the outline of the handbook. In Japan, the government is drafting a basic policy for transition finance and each sector's roadmap in 2021. According to European companies such as Repsol, Snam, which is a utility companies, explained at the seminar that long-term transition strategy has to consider various internal and external factors, supply chain impacts, etc. Also, it is difficult to define what transitionally green eligible assets are consistently and globally, since each country has different energy mix and industrial structure. This type of finance needs more conversation between the borrower and lenders or issuer and investors. Next, I would like to introduce several transition finance examples from the world. One is Cadent, which is a UK utility company, and the second one is Enel from Italy. If you look at the examples, there are two types of transition finance. Both finance includes both green eligible and transitionally green eligible. For example, in case of Cadent, the green transition user proceeds one is renovation of gas pipeline to accept hydrogen, which is considered as a transitionally green asset. But last three, renewable energy, green transportation, and energy efficient building, which is considered as a green eligible. So the transition finance should be mixed both green and transitionally green assets there. If you look at the NL case, which is sustainability linked finance, this goals also mixed the green target and transitionally green target. So if the NL has to achieve the GHG emission reduction as written in this KPI 1, then the efforts to realize this target should be a mixtured strategy, both green measures and also transitionally green measures. So these are the examples from Europe. Another example I brought from our newest transitionally green evaluation for shipping company in Japan. Their user proceeds are limited for very lower CO2 emission LNG tanker ship with 40% CO2 reduction EEDI basis. And the important thing is that in addition to the user proceed, we evaluate their transition strategy. The above user proceeds will contribute to achieve their long-term GHG emission goal, like 50% CO2 efficiency improvement by 2030 and 70% by 2050. And in addition to alignment with such a longer-term strategy, we also checked that this LNG tanker ship does not lock into fossil fuel, but by 2030, K-Line company plan to introduce less CO2 emission energy like ammonia or renewable carbon, methane, etc. which can be used in this ship as well. They're also studying CO2 collection system on the ship at the same time. With such long-term science-based strategy and plans not to lock in for fossil fuel, this finance quite support K-Line's transition to less carbon world. I hope such support for transition efforts from Asian banks will increase this year and after. Lastly, I'd like to request one thing to bankers and investors who joined this webinar today. When you consider financing for the company to support less carbon efforts, please review not only the use of proceeds, but also the company's long-term vision, pathway, and investment plan for such carbon reduction measures. By 2030, the world has to keep less 2 degrees, preferably 1.5 degree temperature rise according to the Paris Agreement. We have to think what the most effective ways to move forward to carbon neutral in the longer term is. Thank you for listening.
Thank you very much, Ms. Kajuara, for your presentation. And thank you, all of you three speakers, for your very nice, comprehensive presentation. Well, let's dive in right to our question and answer session. And may I request those who would like to ask questions, just to raise your hands. And will I be able, by the way, to see everybody's hand raising? I hope so. I have noted already one or two who want to ask the questions. But let me start the question and answer session, and I address this to Atsuko. Atsuko,
Yes.
You mentioned the Climate Transition Finance Handbook that was published just very recently, December 2020.
Yep.
I haven't read the book, but whatever its contents, the critical link, as always, is how to implement the broad statements of guidance and expectations and translate it to the practical aspects of at the level of practice, at the ground level. Because at the ground level, unless there is a measure of urgency, implementation can be very slow. And in the 4 factors of climate transition, for example, can we go back to your, I think it's slide number 8, page 8.
Right.
Your 4 factors of climate transition. That's page 8, I think, of your slide.
Okay.
Yeah, 8, slide 8. 4 factors of climate transition.
Yep. Okay. This one?
Back, please. 4 factors of climate transition. Slide 8. There. You are.
This one?
Here, for example, our strategy is based on science.
Mm-hmm.
So,
yep.
This is an example of part of the. This is really an exhortation of what we should do. But as I focus on this factor 3, which says the issuer's strategy must be based on science-based target and roadmap.
Yep.
And the roadmap must be certified, verified by independent verifiers. I have always thought, Atsuko, that the verification by independent verifiers is the weakest link in the climate finance chain for 2 reasons. There doesn't have to be currently existing adequate availability of independent verifiers compared to the demand represented by the large amount of financing required. That's my take. And the second reason is that is the problem of lack of harmonization of green standards to be applied in verification. So the question is, where might we find the answer to strengthen this weakest link, if you agree with me? And perhaps the other speakers may want to answer the same question.
Right. Do you mean weakest link means?
Is the lack of independent verifiers.
Okay, lack of independent verifiers in your country.
Against the demand. For
against the demand. Okay.
Verifiers.
Well, so the handbook does not necessarily. It's not the requirement, but the recommendations to get the certification for such science-based. But if you can explain your strategy goes forward to achieve to the 2-degree scenario. So when we evaluate such transition assets, we are asking the company whether they are doing the 2-degree scenario or the 4-degree scenario for the future. Then so they usually do the risk and opportunity analysis about in case of 2-degree rise world and the 4-degree rise world. Then for example, for the shipping company, they are expecting or calculating how much their shipping needs rise due to the 2-degree scenario and 4-degree scenario. And also when the world goes to 4-degree scenario, what happens for the natural disasters? So in that case, a shipping company considers the risks of such a natural disaster and possible damage for their ships. And they are trying to reduce such risks and reduce CO2 emissions from the shipping. And in order to, so through these scenario analysis and also their investment plan to reduce their CO2 emission by 2030, it is very, quantitatively measurable and aligns with such a 2-degree scenario. Then we can say it's based on science. So in that case, if they do such scenario analysis and investment plan measures, then we can say it's a kind of science. So you don't have to necessarily to get the science-based certification for implementing the transition finance.
Thank you. Grace, Miss Grace Lee, I know you have some questions. Would you like to ask them now, Grace?
Hello, can you hear me?
Yes.
Yes. I have a question for Sakda. Is it compulsory to have an external reviewer for issuing green bonds in Thailand? Could the rating agency play the role in an external reviewer of green bonds in Thailand? And I noticed that lots of the reviewers are not the rating agency. So I'm just wondering, what's the key selection criteria for issuer to choose its green bonds external reviewers in Thailand? Thank you, Sakda.
Okay. The first question is about whether it's compulsory to have an external reviewer to review the green bond issue in Thailand. No, it's not. From the regulatory point of view, that's not compulsory. The SEC, who's the regulator for the bond market in Thailand, does not require green bonds to be reviewed by an external reviewer. But however, the regulators, SEC, always encourage to the issuance to be certified or verified by external reviewer, and without this external reviewer involvement, I believe that the issuer won't be able to raise to have enough interest in the market or enough demand for their bond issuance. So it's not strictly compulsory, but it's more driven by investors' expectations that there should be an external reviewer involved in the certification or verifications. So that's the first questions. And secondly, whether local rating agency should be involved as an external reviewer. Yes, I believe so. It depends on the green bond market in each country. For Thailand, choose rating has to become an certified verifier for green bond issuance, and I think naturally, because of the involvement of credit rating agency in the bond market, and also the resources that rating agency have, it's easier for a rating agency to get involved as an external reviewer. It just something that rating agency can contribute to the development of green bonds or sustainable bonds issuance in the markets. And I definitely think it's very appropriate for a credit rating agency to get involved in that aspect as an external reviewer. And in terms of the questions of how do you select external reviewer, I think there are a number of things that can be considered. I think first of all, it should be driven by the investors. So you have to ask, to assess the preference of the investors of which type of reviewers that they prefer. Actually, external reviewer, there are a number of, you have agency who are more research-based, who can provide second-party opinion to the bond issuance. You also have the reviewer in the capacity as verifiers, against a set of criteria on green bond principles. So one thing is that the market preference of which type of reviewer is preferred by the market. Secondly, it also depends on the types of the green projects being financed by the bond issuance. Is it a solar project, or is it something very complicated that you need to have an external reviewer that have a very in-depth knowledge of that particular type of green project? So that also one thing to consider. And of course, the service fee also a very important factor for the issuer, right? So it's they have to also think about the cost from the cost perspective of which reviewer will cost less or which reviewer will cost more for them. Yeah.
Thank you, Sakda. I saw the hand, Mr. Raymond San del Rosario. You raised your hand. Would you like to ask your question, Raymond? Can we focus on Raymond San del Rosario in a group, please? Raymond, are you there? Raymond, if you're not yet there, we'll get back to you. Or there, Raymond, go ahead. Ask your question, please. Unmute yourself. Raymond. No, we cannot hear from Raymond. So let's proceed. So we'll get back to Raymond later. Grace, do you have some other questions you'd like to raise? Grace?
Hello?
Yeah, go ahead, Grace.
Yeah, I also have a question for Stella. Being a rating agency in China, what short-term and long-term opportunities do you expect from the 2060 carbon neutrality goal in China? Please share your view with us. Thank you, Stella.
Hi, thanks, Grace. Since my connection is not good, so if you lose me, please let me know. So first of all, thanks for your question. This is a very good question. So I would like to say to answer the question from the three aspects. The first of all is the scale. We can see more and more green bond will be required to verify by the independent third party. And if we look at the carbon neutrality bond, which could seems to be the green bond 2.1 version, which also strictly required for the verification. And the green bond issued in 2021 is expected to reach 30 to 8 billion US dollars. So if we look back, around 80% of green bond are verified. And so I would say along with this rapid growth with green bond market, in China, the market rating scale for the CRAs looks very promising going forward. And the second is the usage of this green verifications will be widely expanded. The authority will establish a green rating system to lower the cost both for the issuers and investors. So the verification result will be extended from the green bond market to the whole green financing systems. In addition to just a green label, the verified result will be applying to green loans to track the environmental effectiveness. So I would say the application range will be wider than before. Last but not the least is the quality of the report and the consistency of the verification report, because as the disclosure requirement will be more strict and standardized in the next few years, and the verification result will be more comparable, complete, and aligned with these global standards. So it would be very helpful for this global cooperation between the international CRAs. And also, we can provide more convinced services and products to domestic and international investors. So to answer your questions, I would like to say from the scale side, from the usage side, also from the quality side, it would be a tremendous opportunity for Chinese CRA in next few years. Thank you.
Thank you, Stella. May I have a question to Sakda? Sakda, regarding the sustainable banking guidelines for responsible lending launched in August by the Thai Bankers Association, what has been the experience so far in compliance? How are these guidelines being enforced and monitored? Is this done by the central bank, the monetary authorities, or by whom? Because this would be a good example for all of us in the audience. And how does TRIS rating fit itself into this responsible lending framework to support and encourage sustainability finance? Sakda, please.
Yes, I probably can just comment as an outsider because I am not part of the banking association in Thailand. But my understanding is that this is a voluntary guidelines adopted by each bank. This is a guidelines agreed by the members of the associations that each of them will try to stick to these guidelines. In terms of enforcement, I'm not sure about that. I do not think that this is something that the regulators will come to enforcing it. My understanding is that the central bank itself, the regulators, are also working on something to actually, at the policy levels, something to be introduced, from the regulators. But this is, my understanding, is encouraged by the central bank to help the banks to work together to come up with a guideline and try to promote these sustainable finance guidelines as much as they can. But in terms of enforcement, I believe it's not coming from the central bank. It's self, compliance. That's my understanding.
Thank you. Do I hear or see any more questions? Because I'd like to raise some other questions myself if I see none. So I'd like to address this again to Stella. Stella, you have China has an annual investment of, you say, 320 billion for 640 billion US dollars for China to become carbon neutral by 2060. And I would think that these amounts would come largely from government or from government subsidized or government supported funds, let's say funds for the Belt and Road projects. And you did mention, for example, the Green Belt Road and Road Initiative. So the government really, if it is the source of support or direct funding, would be, what do you call this, would be in a very good position to implement the green orientation of projects. Could you, this Green Belt and Road Initiative seems to be a very interesting one. Could you give us a little more explanation or information about what this is all about? How the Green Belt and Road Initiative is going to support or encourage sustainability finance? Stella? Did Stella leave for a while? Okay. That's it.
Hi,
Yeah.
Mr. Senti. Hello?
Stella cannot hear bad connection.
Yeah,
I'm
hi,
sorry about
Mr.
that.
Senti.
Can you hear me now,
I
Stella?
got a poor connection here.
Can you hear me
Yeah,
now,
I
Stella?
have.
You want me to repeat?
Yeah, on and off. Can I repeat so you
the
can let me
question.
know if I understand you correctly? So the first. Yeah, the first
I
question
want to
is
know a little more of the
how
Green Belt
this
and Road
huge investment
Initiative.
could be filled.
Go ahead, Stella. We
Hello?
want to know about the Green Belt and Road.
Yeah, I just want to confirm the first question is,
Okay.
yeah. So the question is regarding how the investment requirement going to be filled, or how about the Build and Road initiatives is going to work.
I see.
Hello?
Yes, go ahead. Can you hear us?
Hello?
Can you hear us?
Hello? Yes, now I can hear you. So the question is, first of all, how the huge investment is going to be filled, right?
Yeah, well, let's be more specific. Tell us more about the Green Belt and Road Initiative and how the government is really helping to direct support sustainability finance in projects where they are supporting it with funds.
Okay. Since the Belt and Road arrangement gonna be the biggest and huge investment from the infrastructure side, so the first of all, also the government encourage the corporates, the investors, and the lenders to use the green concept to invest all the infrastructure along the region. The first of all is to make sure that the old or the traditional infrastructure gonna be adapted with a renewable energy friendly and use a renewable material and a green material as well. And secondly, I assume they're gonna apply the new infrastructure skills to this region as well, with the communication and the technology skills can help to improve the efficiency and reduce the carbon reduction, and as well as to connect the traditional infrastructure with new infrastructure to make it more environmental efficiency.
Thank you, Stella. I think we have time for one more question. Grace, I think you have a question for Atsuko. Grace?
Hello, Sandy, can you hear me?
Yeah.
Okay,
Can you hear me?
question for Atsuko. I'm
Yes.
wondering how rating agency will contribute to the net zero carbon by 2050 in Japan. Could you share your view with us? Thank you.
Yes, thank you. Thank you, Grace. So I saw that main green bond player in Japan is like the green building, real estate sector, or mass transportation like electric train sectors, as well as you may know, renewable energy player. But the important thing is we should bring more various companies to the green bond market, like manufacturing sector, and also iron, cement, chemical industries, which is called as a hard to abate sector. How can we move forward to them to less carbon industry? So in order to do so, we're gonna introduce a kind of transition finance and also positively or aggressively to, introduce their efforts to much more bankers and investors. That's what I think now.
Okay. Thank you, Atsuko. But while you're still there, let me ask the question of Ms. Debbie Aritao.
Yeah.
And her question is, how do regulators monitor compliance with sustainability expectations or directives or goals?
Well, so there is no regulators who has a regulation for such a green finance in Japan at this moment. But the government, like Ministry of Environment or Financial Service Agencies, and also Ministry of Economies and Transportation, they are now trying to make a kind of guidelines to prevent the so-called greenwash projects, but promote more realistic green projects, and also the basic policy to introduce the green, not only the green, but also innovative transition finance to the world. So the regulators are now not regulate, but they rather promote to expand this market, because we need to expand the market first, then maybe regulation comes later. That's the current situation, I think.
Okay, thank you, Atsuko. I hope Debbie Aritao, you were that satisfies your question. We have reached the end of our time allocation. Thank you very much, all three speakers and all of us participants. I'd like to congratulate everybody for this active participation. We probably need to have some more of webinars like this on this topic, because this topic is such a broad, big cake. And what we tried to do this afternoon is really just to have some bite-sized portions of this very big cake called sustainability finance or climate-aligned finance. So stay tuned. I will suggest to ACRAA and to ABA to consider pursuing this joint venture of joint webinars some more rather. And for those of you who do not know, ACRAA was really organized at the initiative of the Asian Bankers Association way back 20 years ago on March 31, 2001 to be exact, at the initiative of the then chairman of the Asian Bankers Association and the president of Japan Credit Rating Agency. They convened the 10 domestic credit rating agencies in Asia operating at the time. I was part of that. It was a beautiful day in Tokyo, and that was March 31. We formally organized in Manila in ADB in September of 2001 and started full operations the next year, 2002. So we are celebrating our 20th anniversary. So more to come. Again, thank you very much, Atsuko, Sakda, Stella, and Grace, who is the event coordinator for this event, and also to Mix Moreno of ABA, who has been very much part of the preparatory team. Thank you very much, everybody, and keep safe until we meet next time. Thank you.
Thank you
Bye-bye.
for all. Bye.
Thank you.
Bye-bye.
Bye. Bye.